Investors are getting some more clues on the thinking at the Federal Reserve. Minutes from the Fed's January meeting revealed policymakers are unsure about the need for rate hikes this year. They also discussed a timeline for unwinding their $4 trillion balance sheet. Yahoo Finance's Brian Cheung is here to explain. Brian, do you think this really shed light on what to expect in terms of rate hikes going forward?
Well, yes and no. So the minutes that were released yesterday at 2 p.m. show that the committee was split on whether or not they could see rate hikes before the end of 2019. There were some folks that actually said on the committee that they could support further rate hikes later this year if they did see inflation, for example, picking up. But the Federal Reserve on the whole has insisted that inflation has been, quote, pretty muted. However, this is pretty interesting because we have heard some Fed speakers, for example, New York Fed President John Williams, say that he could still see a rate hike on the table. But for the most part, most of the FOMC speakers have said, at least for the first half of this year, there's no rate hike on the table.
All right, let's move over to that portfolio of assets. What kind of timeline is the Fed talking about when it wants to unwind this balance sheet?
Yeah, so we got a little bit more clarity. We've actually heard the likes of Lael Brainerd and also Cleveland Fed President Loretta Mester say that they could actually see that process ending this year. But the minutes actually yesterday noted that most of the members of the FOMC supported at least communicating its plans to end the balance sheet normalization process by the end of 2019, meaning that basically the terminal end of that program could be the end of this year.